Thank you for joining us again and welcome back to our channel. If you are joining us for the first time, we want to thank you for watching. In today's episode, we shall be looking into the reason why the perception on Africa and the reality is not holding ground. Why Africa's partners perceive the continent as a risky destination for business, which has been, in my own perspective, has been a narrative that has been out there for several years. The mainstream media will want you to believe that Africa is a risky business destination. But ask yourself a question. Why are the Chinese making it successful in the continent? Why are the Russians getting really closer? And you do have the Indians, the Middle Eastern partners, and some European businesses are making it big and huge in the continent of Africa. There are hundreds of mining companies, European businesses, and North American companies that are currently in the continent of Africa, and they have been there for so many years. I can't really remember. But what the main media will want you to believe that Africa is so extensively risky for you to put in your capital, but the continent of Africa continues to develop and grow. Prior to the pandemic, Africa had one of the most fastest growing economies in the world. The data clearly shows. But currently, if you look at the notions that the continent is so risky that capital should not be put into the continent, I think that's a narrative that has been out there. When you look at African nations, and officials start pushing back to this narrative that has been out there to basically deprive the continent of investment. Most recently, the president of Kenya, the South African leader, Cyril Ramaphosa, and a number of presidents across the continent have also requested that Africa should have a level playing field to make sure that they can compete in a competitive environment that will provide them the opportunities that other continents have. But that has never been the case, especially in the financial sector. Any African nation that does not have a better understanding or grasp with regards to geopolitics and geoeconomics in the 21st century will face enormous challenges. Now is the moment for the continent to open its eyes wide to see how the strategic decisions could impact its own population. In a recent interview, the president of the African Development Bank clearly indicates and also pushed back to that narrative that the continent of Africa is a risky destination. Let's take a listen to that particular conversation with the channel BBC, and we will dive into more specifics with regards to the perception and the realities with regards to the continent of Africa.
Over your tenure, have you seen things change? For example, I'm looking at the fact that the IMF has created or is in the process of creating a third seat for Africa on its board. South Africa, for example, is now included in the G20. Have you seen things change?
Well, there's no choice. There's no doubt everything has to change even more, right? First and foremost, that global financial architecture is not serving the interests of Africa very well. Take a look at what happened during COVID. Well, the developed countries actually disbursed what? Fiscal stimulus, $19 trillion, 19% of the global GDP. Africa did what? $83 billion. That's just a minuscule, 4.5%. Take a look at climate change, right? Climate change is devastating Africa more than anybody else, any other parts of the world. We didn't cause climate change, only 3% of cumulative emissions, but we suffer $7 to $15 billion of losses every single year.
Akinwumi Adesina, welcome to Hard Talk.
It's good to see you, Stephen.
It's great to have you here. You need the world to believe in a bright African future. How's that going right now?
It's going pretty well. If you take a look at the African economic outlook we had from the African Development Bank, the GDP growth rate, real GDP growth rate last year was 3.1%. This year it's 3.7%. And next year it's going to be 4.3%. Now why that is important is that is well above the global average. You still have 10 out of the 20 fastest growing economies in the world being in Africa.
Yeah, it's not quite as good as it sounds because you have fast rising populations across
Yes,
Africa.
but when you have a lot of global shocks like we have, increasing real interest rates, and you have also a lot of geopolitical risk, you have a lot of inflation all around the world, Africa still has its head above the water. Yeah, I agree with you that in terms of the population growth rate, it's still high. Real GDP is still not as high as we want it to be. Africa still needs to grow at double digit though, for probably another 10, 20 years, so you see a lot of millions of people taken out of poverty. But don't forget, Africa is still the pivotal continent in which it has tremendous amount of opportunities to actually accelerate its development.
But as boss of the African Development Bank, you need to persuade investors, both state investors, multilateral institution investors, and private investors, that Africa is a risk worth taking. And right now we see political instability in many different parts of the continent. We see massive economic problems, perhaps highlighted most by youth unemployment across the continent of Africa. The risks still look enormous to the outsider.
Well, you walk across the street, it's a risk. You take a flight, it's a risk. The world is all about risk. The world is about managing risk.
Yeah, but the investors of the world face choices. They don't have any particular reason to want to invest in Africa.
Let me tell you why they should actually invest in Africa, even though if I accept some of the risk. First is take a look at what you were saying earlier on in terms of population growth rate. You have a continent that's going to have 2.5 billion people by 2050, right? That's going to be really, especially young people, you have 477 million of them less than the age of 35. That's the workforce of the world.
Yeah, many of them unemployed young people who will be deeply discontented.
No, but actually, when you actually turn that demographic advantage into an economic dividend, that's a different thing. But take a look at also the agriculture potential. Well, Africa has 65% of the uncultivated arable land left to feed the world, 9.5 billion people by 2050. That's not in Asia, that's not in Latin America or Europe. It's in Africa. So what Africa does with agriculture will determine the future of food in the world.
We'll get to the detail of some of that proposition later. But let's just stick with risk.
Well, we're just beginning the conversation. The journalist of BBC, Stephen Sakur, has some really strong points, no doubt. Africa just have some high numbers of unemployment and some risk in some areas, but the notion that there is abundant risk and also instability in a number of regions, countries across the continent, I think that's overstated. However, the conversation will get a little bit heated with regards to the area of risk. Risk is the elephant in the room, and that's what has been used to sideline the continent of Africa with regards to capital and also, more importantly, in investment in a number of areas. So African leaders and business officials need to tackle this particular conversation about the perception and the reality in the continent of Africa with regards to risk. This also turns away a number of investors that may perceive the continent as a huge destination for business. More importantly, the rating agencies may move ahead to push this narrative of very risky environment for capital. Let's join back this particular conversation and see what the president of the African Development Bank will go back to engage Stephen with regards to this particular issue on risk.
Again, this is about money, and it's about loans and debts. And right now, I think it's right to say 22 or 23 African nations are struggling with the kind of massive debt that means they're flirting with default. I mean, some of them have defaulted. Zambia, for example, defaulted in 2020. It's only just emerging from default now. That represents, for a lender, a clear and obvious form of risk.
Well, let's take a look at the risk. Perception is not reality. Data matters. Moody's Analytics did an assessment, a 14-year assessment of cumulative risk of losses on infrastructure around the world. Guess what they found? They found that risk of loss in Africa, actually risk loss in Africa was 1.6%, or 1.9%. Latin America was roughly 12%. North America was 10%. If you take a look at Western Asia, 4.5%. That means that Africa is not as risky as people say. That said, you do have market risk, you do have political risk, you do have financial risk, and that's what we do as multilateral development banks, is to de-risk those investments. But if you take a look at it in terms of risk-return analysis, Africa is still the place to be.
Hang on, some of this is jargon, so let's be simple about it. When you say we need to de-risk some of the lending to Africa, you basically mean you want special treatment, don't you? From institutions like the IMF.
No, it's not special treatment at all. In fact, Africa wants no freebies. We have the instruments to de-risk. Let me give you
it is special treatment because you want these special drawing rights from the IMF. They're literally called special drawing rights.
Yeah, but I'll tell you, take a look at what we're talking about here. If you take, for example, Benin needed to go to the capital markets to raise money from external investors, right? You still have a risk premium that African countries have, because everybody keeps saying, just like you said, Africa risk premium. It costs us 3 to 4 times to raise money than any part of the world. But we have partial credit guarantees that allows us to use $195 million to allow them to raise $400 million from external investors. We did the same also for Senegal. We did the same for Cote d'Ivoire with $400 million to raise $530 million. What that does is it allows you to go into the capital markets, allows you to raise money long term and at a lower interest rate. And that is how we do risk investment. That's very, very important.
As you may have heard, Stephen Sakur clearly indicated that it's as if the continent of Africa is asking for a free hand. I think that's not the case. What African countries are asking is to have a level playing field, because the financial system is not well structured to favor the continent. Despite criticism with regards to his travel to the United States of America, the president of Kenya, Dr. William Ruto, clearly points out where Africa stands with regards to the international global financial system. We saw what happened in Paris when the South African president Cyril Ramaphosa clearly lashed out with regards to the system, how it does not favor the continent of Africa. But let's listen to this particular interview with regards to his travel to the United States, and we'll jump back with regards to analysis and go back into that particular conversation between the president of the African Development Bank and also the BBC reporter. Let's listen to William Ruto with regards to his own perspective concerning the financial system.
Countries in the developing world, including Kenya, pay between 5 and 8 times more for interest for the same resources that are available in the global markets. So the conversation that we had with the United States is that they will lead and they will champion, and we appreciate that everybody has now come to agree that we need a fairer international financial architecture, and it is the reason why the United States have committed $250 billion and specifically $21 billion to the concessionary window of the World Bank under IDA, so that we can reach the target which we set in Nairobi of $120 billion US. That will support developing countries like Kenya access concessionary financing, so that countries do not spend more in debt repayment and in managing the effects of climate change, but they will spend more in development, in health, in education, in social services. And I am very proud of the outcome of my meeting with President Biden, and by extension the US government. Both President Biden and the senators and the congressmen have agreed to double US contribution to the IDA window, so that we can be able to do more with our resources and be able to access more concessionary funding for the development of our countries and also for our development.
President William Ruto of Kenya has clearly pointed out that he's made the conversation clear where Africa stands. But if we go back to the conversation between the president of the African Development Bank and the BBC journalist Stephen Sakur, this question of with regards to how Africa is being treated in the global financial system does not clearly sit well with Stephen. He posed the question to the president of the African Development Bank as if he doesn't understand where Africans stand. And let's listen to the question and listen to the response from the African Development Bank president in regards to the financial system when Africa is concerned.
For China,
It seems to me one of your messages over your quite long tenure now as president of the ADB has been that the key multilateral financial institutions, the IMF, the World Bank, they are not sufficiently able or willing to understand Africa, and they need more African involvement and input. Over your tenure, have you seen things change? For example, I'm looking at the fact that the IMF has created is in the process of creating a third seat for Africa on its board. South Africa, for example, is now included in the G20. Have you seen things change?
well, there's no choice. I mean, there's no doubt everything has to change even more, right? First and foremost, that global financial architecture is not serving the interests of Africa very well. Take a look at what happened during COVID. Well, the developed countries actually disbursed what? Fiscal stimulus, $19 trillion, 19% of the global GDP. Africa did what? $83 billion. That's just a minuscule, 4.5%. Take a look at climate change, right? Climate change is devastating Africa more than anybody else, any other parts of the world. We didn't cause climate change, only 3% of cumulative emissions, but we suffer $7 to $15 billion of losses every single year. I just came from Nairobi, where we had our annual meetings there, devastated by floods. And you have Zimbabwe devastated by drought, and Malawi and Zambia with that. Now, what happens is Africa needs, Stephen, it gets $30 billion in terms of climate adaptation, but it needs $277 billion. Now, let's go further in terms of what has happened also with the issue of debt that you were talking about. Okay, we have the situation for that was not just because economies were being mismanaged. No, we still have, people say you have long COVID. You have long fiscal COVID here, in the sense that the economy is actually trying to recover from the effects of that COVID. But the two instruments that the global financial architecture put up, it's not solving that problem. You have the debt service suspension initiative, which was just simply postpone the evil day.
Okay. The reason why the conversation is taking this particular turn, the president of the African Development Bank begin to realize where the journalist BBC is going. Stephen does have some very interesting points as well. However, if you look at perspective, the special drawing right, the SDR, with money that was set aside to support countries that were coming out from the COVID and also to revamp their economies and to develop. If my knowledge serves me well, that was about $650 billion US dollars. But when the money was distributed, the continent of Africa got just about 33 billion. When you look at that, that is insignificant in regards to the challenges that the continent went through. That's the reason why the president of the African Development Bank is pushing this narrative. So it could be like $600 billion and the world think that Africa made a huge amount of money from there. What is 33 billion US dollars from 650 billion US dollars compared to what went to Europe, the Asia, and the North American countries and other important other continents around the world? So let's put it into context and understand what is really going on, why the continent of Africa is pushing back and is waking up. Let's go back to this conversation as we close this episode regarding the special drawing right and how the president of the African Development Bank will respond to that particular question coming from Stephen Sakur.
So your message is, that thanks to COVID, thanks to climate change, Africa's faced profound economic challenges and the international community hasn't really stepped up and responded and understood and appreciated.
If I may just say, because you mentioned the issue of the SDRs, and if you know, I'll talk about that.
The special drawing rights.
Special drawing rights. That special drawing rights, I have been a global champion for the need for us to take those special drawing rights of IMF and use it better. When they were issued, that's a contingent facility, $650 billion were issued. Africa gets how much? $33 billion.
Right, okay. So I get it. The message you've delivered over years is that the international community needs to do more.
But I want to tell you what.
But I need to switch the focus a little bit because
now you have a better understanding in regards to why Stephen clearly want to shift the conversation when the president of the African Development Bank indicated that from 650 billion US dollars, Africa got just $33 billion. That particular truth and also notion that the continent of Africa is not fairly treated, the journalists quickly tried to shift the conversation to something else. So this is the inequality that the continent of Africa is pushing against, and he strongly engaged the president of the African Development Bank to move the conversation to areas which will favor his own perspective. I think this is it's an intentional way to not actually engage, to change the narrative, to go back to areas which would not have actually exposed the hypocrisy with regards to the special drawing rights. Let's go back to this conversation as we close this episode.
You're a former Minister of Agriculture in Nigeria. You're an African politician. Surely it's incumbent upon you to recognize that part of the problem here is desperately poor governance in far too many countries inside Africa.
Well, there's no doubt about the need anywhere in the world to have improved governance, improved transparency, improved accountability.
So I don't see you talking about that.
No, I do.
Let's talk about one of the most famous African writers and sort of the conscience of Africa, Wole Soyinka, the Nigerian novelist. He said too many African states are run by his, quote, sick, old men, dictators, authoritarians who've been around for decades and decades. Corruption is endemic in too many countries in Africa. Isn't it incumbent upon you to focus some of your effort on getting African nations to change?
We actually, within the African Development Bank, have a program called SEGA. It is all about economic governance in Africa. It has to do with public financial management. It has to do with debt management. It has to do with reducing illicit capital flows. Now, I agree with you. Today we have illicit capital flows out of Africa, about $89 billion a year. Sometimes it's like pouring water into a basket, right? It needs to be able to hold it. But this much I would say, even as I agree with all of that, corruption is not unique to Africa. Look,
nobody's saying that. Nobody's saying that. But what I'm interested in, I'm interested in your priorities. There was an extraordinary. Hang on, there's an extraordinary report in the Financial Times last year which revealed that your own African Development Bank Anti-Corruption Fund, which was established at that point 7 years earlier, had never been used. There was $55 million there to finance anti-corruption efforts, which you simply hadn't tapped into.
No, that is absolutely
Why?
It's not correct. We actually have an independent anti-corruption unit that actually sanctions companies that have non-competitive behavior.
You set up a fund and you didn't spend the money that was in the fund. But will you let me make
the point? Because you are asking me the question, so let me answer it. The point is, we actually have the fund. But in implementing that fund, guess what we found? We found that there were conflict of interest in the way the fund itself was set up. As president of the bank, I'm not going to mingle that with the funds of the bank. And we said, no, we can't do that. We need to find a way in which that is given to third party. The money is there, the money is going to third party. But look, we're not going to mingle money we got for those that pay sanctions.
It seems extraordinary that for 7 years you had an anti-corruption fund, a so-called integrity fund, which you didn't spend a single dollar from.
Interestingly, Stephen came really strong and prepared, and actually he delivered on some very important issues there with regards to corruption and also transparency and a number of issues that's affecting the continent of Africa, affecting its growth in different areas. But the BBC journalist Stephen Sakur failed to also point out that Africa is also a victim of billions of dollars leaving the continent, like the president of the African Development Bank and the former president of South Africa, Thabo Mbeki, pointed out that the continent of Africa lose billions of US dollars. There are a number of companies like Glencore and the rest who come to the continent to exploit the resources and do not pay taxes. So all of this needs to be configured and put into this particular conversation. However, Stephen has some very interesting point there, that the continent also have to wake up in several areas. But again, the president of the African Development Bank stood its grounds to make some indication that what the bank is doing. However, this is really like complicated, and this is where the problem is. This has to be dissected and explained to the African people, and where the bank stands and where the vision of the African people stand. Let's go back to this particular conversation as we are drawing down finally.
Well, $54 million, we are a $318 million bank. And just so that you know, the African Development Bank was ranked just last year as the most transparent institution in the world.
Let's get back to the strategic vision. You've outlined it to a certain extent with me over the last few minutes. It is undoubtedly true that climate change and energy transition is one of the key pillars of what you want to achieve with this investment in Africa. How's it going?
It's going pretty well. We now devote 55% of our overall financing in the bank to climate. When I was elected 2015, we had only 9% going to climate. But climate is the biggest issue. Climate adaptation is the biggest issue. Now, we have three ways in which we're supporting African countries on that. First is we made a commitment to double our climate finance to $25 billion by 2030. Second, we have a program that is called African Adaptation Acceleration Program, which is to deploy $25 billion for climate adaptation. By the way, it's the largest climate adaptation program in the world, together with the Global Center on Adaptation. And thirdly, 9 out of 10, Stephen, countries that are most vulnerable to climate change in the world are in Africa. 100% of them are in the low-income countries that we serve with the African Development Fund. So what we did was we created a climate action window with $429 million that will rise to about $13 billion to deploy capital to support those countries to be able to, for example, let me get practical here, provide crop insurance for 20 million farmers, and also have 1 million hectares of land that's been degraded to be improved, and also 20 million people to have climate information. And so that's what we do. Now, interestingly, we have one program that's working very well. It's called Africa Disaster Risk Insurance Facility. What it does essentially is it pays premiums for countries when they face exogenous shocks like this one. We've been able to do it for 15 countries. We're scaling that now to $1 billion to be able to insure countries against catastrophic risk.
So I keep trying to close the episode, but the conversation keep going to areas where the continent of Africa need to approach really carefully. This issue of climate change, I'm not a climate skeptic, but again, let's be real. Yeah, the continent of Africa does have enormous abundant resources. Fossil fuel is a very important part of the continent of Africa's development. Africa should approach this climate issue with caution and also make use of its resources at the same time. But again, for those advanced and industrialized countries that have also polluted the world in several ways, should be ready to pay for that. We all saw what happened in Paris and also in Glasgow and most recently in Egypt, and we're looking what happened in the Middle East. It's important for the continent of Africa to stand its grounds and make it really clear that if the rich countries are ready to pay, then they are able to make some adjustment. But African countries cannot at the same time abandon the fossil fuel that will enable them develop their own continent and their various countries. So this is a very important conversation that the governments of the continent of Africa needs to pay closer attention. Let's listen to how Stephen Sakur drive this message and engage the African Development Bank president and how he will respond, because with countries in the continent of Africa like Zimbabwe and other countries in the region who are very skeptical regards to this climate change issue and their own different project with fossil fuel, they have different perspective. Let's go back to this conversation and see what happens.
So but it's still not enough. It's still not enough.
Lots of different mitigation and adaptation efforts that are being financed, partly at least by the ADB. I'm just interested to know whether you are still willing to finance investment in fossil fuel production, exploration and production in Africa. There are countries from Mozambique to Angola to Zimbabwe which are still major players and to a certain extent rely on fossil fuel energy. Are you prepared to put money in those projects?
We are not doing upstream work on oil or gas. No. And we don't fund coal either. However, I would say this. We fund natural gas, because natural gas is a very important transition fuel for Africa, just like it is in Europe where you are, right? You turn on your cooker and you cook, guess what? With gas. Why should that be different from African countries? Where we lose today, we have 1.2 billion people that don't have access to clean cooking energy. You know, we lose 300,000 women every year. All they're trying to do is just cook a decent meal. That doesn't make any sense. Secondly, is that we need gas also for fertilizers. The same way in which the West has fertilizers, Africa has a right to be able to do that. But this much I would say about gas so that we don't confuse ourselves. You know, gas reduces the amount of emissions you actually get from relying probably on just simply other fossil fuels. And secondly, when you use that for clean cooking, it actually saves hundreds of millions of hectares of land.
Thus far, all the promises made by the rich world, the industrialized developed world, to pour billions of dollars into developing economies, particularly in Africa, to help them cope with the potentially devastating impacts of climate change, that money hasn't yet been delivered in any serious amount. Is it your message that countries in Africa need now to be given massive sort of financial recompense for not, for example, deforesting their extraordinary natural assets? I'm thinking of a country like Democratic Republic of Congo, which has vast forests.
Yeah, you know, in fact, if you take a look at Africa today, that Congo basin that you're talking about just now is the second only to Amazon in terms of the carbon lungs for the world. And so Africa is providing the global public goods for which it's not paid for. You know, basically, you have vast carbon sinks, you have vast forests, you have biodiversity. So, but Africa is nature rich, but cash poor.
On that note, we end this particular episode. The conversation continues. However, the continent of Africa needs to wake up and engage the global community from its own strategic interest to put geopolitics and also geoeconomics at the center of every decision-making process. We want to thank you for watching. Let us know what you think. Keep the conversation going. And if you're new here, we encourage you to check some of our informative video on this YouTube channel. We are looking forward to meeting you soon in our next episode. Have a good day. Bye-bye.